Welcome back, Omri. It's been a little while, but not that long. What do we talk about
You
last?
say welcome back every time.
I know, and it's like I live here in this seat and you just keep revolving.
Yeah, I'm coming from time to time to record the podcasts.
But we did the last one on leasing, long-term letting and between short-term letting.
Yeah.
Very popular podcast. I recommend check it out.
Yeah, absolutely.
And today we're discussing ROI. I'm sure anybody who's seen a property deck or has considered buying a property in Bali has seen the ROI line and either wondered what it was, wondered how legitimate it is, or, just thought about how it works, really.
Yeah.
So we're going to dive into that.
Yeah, we're going to talk about ROI today. Thanks, Gawain. Hi, everyone. Happy to be back. It's been a month, yeah?
Since our last one,
Yeah, I think a month or something like that. There's a lot of misconception and wrong information about ROI. And what we're going to do today is try to dig a little bit into how it works, what are the market cycles, why you are promised an ROI of whatever, and then when you start operating your property, it's not at all what
it should be.
Where it should be. So there's a reason for that. We've identified some patterns. They are, very well-known market cycles. So that's most people are unaware of. So we're gonna dive into that and try to make people understand what it is about.
Let's go. Alrighty, so we're unpacking this ROI debacle. First of all, just what it is really, and then how it's manipulated and changed. And, there's a lot of very proactive salespeople, let's just say, in the property market in Bali. So they're, trying to make their project look specifically high ROI.
Yeah.
What factors are included in how they got to those numbers, when those numbers were calculated, and how the market is now. So many variables, so many moving parts. But let's just start off maybe with, what is it?
Yeah, so ROI is basically how much money you make. Yeah, to summarize, return on investment, and it's basically how much money you make. To not confuse with IRR, which is internal rate of return, which is how fast you make that money. Yeah, and IRR would actually be a better metrics to use for anyone investing in Bali, but it's a little bit more. It's complex. More technical. People don't understand the ROI. The term ROI is very well adopted in everyone's mind. So it's basically how much. So if you invest, you invest $100,000. That's into a business. That business is generating $15,000 profit every year. Your ROI is 15%. That's basically what it is. The formula, which we are going to put here.
Definition and the
definition of the ROI. So I don't have the definition. I don't know it by heart, but it's written here. You can read it. And you can see the formula. So you take your returns, you divide them by your investments, and you multiply by 100, and you have your ROI. There's another formula as well that's a little more complicated, but this one was quite simple, yeah.
So what does it actually include? And how do you get to that net amount? And then there's things like costs you got to take into account, appreciation.
It depends if you talk about gross ROI or a net ROI.
Yeah, well.
So that's the interesting part, because in Bali, when you see an ROI on a developer's pamphlet or website, everyone think it's net ROI because historically it has been like that, and it should be net ROI. However, when you dig a little bit and you go into, you ask the developer and you go on the website and look what is the breakdown of what's being included.
That's if it's even there. Usually it's not. It's sometimes not even there. They don't even give you a breakdown.
Yeah, but when it is, you realize that in many, not always, some are very, very transparent and truthful and accurate, but in many instances, for example, taxes are not included.
So it's pre-tax.
Yeah, exactly. So it's not net ROI. Or property operating expenses are very, very optimistic.
Yeah, or some of them,
Yeah,
you're like running on a skeleton staff.
Yeah, exactly. Yeah.
Or with one intern.
One maid for 10 villas. You know? So you really have to dissect how that ROI that you are promised is actually made.
Or actually do it yourself. Especially if you're going to buy something, you got to do it yourself. Like, what is realistic?
Absolutely.
What are the costs?
Yeah, but it can be very hard for someone who doesn't know the market, who doesn't. I mean, we live here, so we know what costs what. But someone that's an investor that lives abroad and trusts.
And some of those management costs are tough to figure out. Yeah.
So it's very important that when you're going to a developer and you invest your money into a developer, just don't trust blindly what they tell you. Because in many cases, I mean, these are salesy people, salespeople. So
used cars salesmen.
Yeah, exactly. You're a second-hand car salesman, yeah? So they will embellish everything. They will make everything formidable and beautiful, and you're going to make so much money, and so on and so forth. So it's important to address that situation. As an investor, you must be aware that you need to look into things and dissect things as much as you can. Maybe get that breakdown from the developer and run it by someone else, like a trusted, advisor or Gawain or whoever.
Just message Omri, all of you at the same time. He will get back to everyone.
Yeah, exactly. So but it's very important because in a lot of instances, people trust what developers tell them because it looks legit on the paper and there's a bunch of drawings and graphs and whatnot and sources and data. But actually, in reality, it's not the same. And there's this one thing that no one takes into account, but really no one in Bali and probably other places as well, is cycles. So our eyes are never the same year on year. It's cyclical. So it goes like this and like this. It's like a DNA thing, It's up and down. So it's never stuck in one number. So when someone tells you, when a developer tells you, okay, ROI 15%, that's not true. It means sometimes it's 17 and sometimes it's 10 or 12. It's rarely 15, actually, because it goes up and down and up and down and up and down. And those are cycles that any market in the world has. It seems like it's been, completely forgotten here. So,
I think in new
we're going to
markets,
talk about that.
In new markets especially. So if it's an immature market like Bali, that swing will be a lot more. But if you're looking in London or New York, that swing will be so slight.
Of course.
Because it's,
of course. Yeah, absolutely. Yeah.
But Bali is like, because it's just supply, demand.
Yeah. I mean, like you say, it exists everywhere, but it's much weaker in many mature markets.
The bigger the market, the more mature, the weaker the swing will be. Yeah.
The more liquid the market is, the stronger it is, basically. Okay, so we have the iPad here, and I'm going to show you in a second what's on it. So the slide is going to appear. You can see the slide in your screen, and I'll be writing little things on it. But before I do that, the one thing we need to make people understand is the ROI doesn't change on its own. Yeah, there's a direct correlation between many factors, but one of the biggest factor is the supply of properties, or available vacancy, and the ROI, the return on investment.
Supply and demand.
Yeah, so it's supply demand thing. Yeah. So the more supply there is, the smaller the ROI will be, basically too. And the least supply there is, the bigger the ROI, because the demand is a different ratio to the offer. Yeah, it's just like anything in the world. Yeah, basically. So we're going to show this slide, and basically that slide shows how one full cycle is made. So here we have a couple of lines. The blue line is the ROI. The pink line is the supply, so the property supplies. When it's low, there's not so much supply, and when the line is high, there's obviously an oversupply, okay? So those lines, what we found out is those lines are intertwined. Basically, whenever the supply is high, like here, the ROI is low. It's a mechanism that's pretty logical. It's offer and demand, basically. So when you have too many villas on the market, then there's a lot of vacancy because there isn't enough tourists to rent them, and so the price goes down and the ROI of everyone is going down, obviously. So if you look at that graph here, you can see 4 quadrants, 4 phases. Phase 1, recovery. Phase 2, expansion. Phase 3, oversupply. And phase 4, correction. Let me explain before we go into each one of those, what happens before and after, basically. So this is just one segment. The graph keeps repeating itself. So here, it goes back up again. And this is going down. And here, it goes down, and then it goes up again. And it's like a DNA shape. So the recovery phase is basically after the full cycle that we have here. So after phase 4, after the correction, when there's an oversupply of villas and the ROI is low, it does correct at some point. And when it goes down in phase 4, after phase 4, there's the recovery phase, which is here and here as well. So we could have started somewhere else, but it was prettier this way. So phase 2, expansion. So this is after the recovery. When we reach this point here, the market is pretty healthy. Everyone is making a decent amount of money. The market is sustainable. The business is sustainable. And this is where things can get bad. And the way they get bad is because everyone is making money. So all the developers are building and there's new construction happening. So new construction happening, declining vacancy here. And the building, and then to reach the point where there's an oversupply of villas. So what happened at that point here and before that point is as new villas are being delivered, so there's always a lag, of course, because it takes 10 months to 12 months to build a villa. But as the villas are being put on the market, the ROI is declining. Okay, then it reached that peak. And when you reach that peak, this is when the ROI is at its lowest, which is, in our opinion, what we're experiencing right now in Bali. So there's too many villas. There are too many villas, and the ROIs are just not what developer promise. So you will see like 17%, 18%, 20%, 25%, whatever. This doesn't happen right now. It's impossible. So it's more like 12 to 15, and in some cases even lower than that. But it will come back. And the way it comes back, as soon as we reach that peak here, what happened is like everybody's like, oh, well, it's not making that much money as I expected. My ROI is not great. And developers are starting to stop lowering their building rates. So less villas being built. And as there's less villas being built, the ROI is getting higher to reach that point where we're here, and then it goes again the other way. And it never ends. It's the same thing everywhere. It's not just Bali. It's the same thing everywhere. But in mature markets, this point and this point are much closer. So it would be more like this, with this point and this point being here. Okay, how did we get there? What's interesting to understand is the little bit of what happens in the past few years. So after COVID ended, there were the Russia-Ukraine war and revenge traveling. So a bunch of tourists, a bunch of people came to Bali, a lot of Russians, which increased mechanically the prices on everything real estate and anything else as well, but especially real estate. And so what happens at that time, we're around here, and then because so many people were looking for villas, Russians, some of them, if they didn't find a place to live here, they had to go back to Russia and to the war. So that was a matter of surviving for them, which I totally understand. So a lot of people were looking for villas, and as the demand for villa increased, the offer obviously decreased. And as the offer decreased and the demand increased, a lot of new developers came in, and some Russian ones as well. And a lot of new construction started to being built. So this is basically the genesis of the post-COVID cycle. Started with the end of COVID, and the Russia-Ukraine war was a very, very important point in how that cycle put itself in place. Yeah. So we don't have enough historical data we don't know yet how long that cycle is. I cannot say today, okay, so from here to here, it takes, so many years. I would think it would take something like around, for a full cycle, so a full cycle would be from here to here, yeah? A full cycle, I would say around 5 years, but this is a very, very, it's a guesstimate, yeah? I don't know. The future will tell us, because we don't have enough, there hasn't been enough time to have, actual data on how that pattern is happening, yeah? But I would think a few years, and my guess would be around 5, something like that.
Educated guess.
Educated guess, exactly. I like that word. What's important here is to understand the pattern, to understand how our line is going and how it's going against the supply line. So right now, and I'm a developer as well, so I know I have the same problem, Right now, on the villas that I sell, I put 12% ROI. Done. Because I don't want people to have false hope. And handed over some villas, recently. The buyer was disappointed and started to operate them. But when they bought the villa, it was a year before. So my data was accurate a year before, but when they bought the villa, back then we didn't realize that, yeah? When they started to operate the villa, then the ROI weren't as high as what I say it would be. So I'm the first one that made the mistake, and this is, you learn from your mistakes, yeah? And this is how I understood that, and I came up with this thing, So there's an opportunity here, and I'm going to take the green color. So obviously, the best time to buy a property is when the supply is high and the ROI is low, because this is when you can negotiate good prices. Because you can say, hey, bro, your properties are empty and you're trying to sell me something very expensive. It's not gonna fly. Okay? If you make your negotiation when the ROI is high, so here, and the supply is low, you're in a situation where there's a lot of buyers but not many offers, so the prices are high. So we could make another line here that is the property prices, which is completely correlated to those two existing lines.
I also just think these are extremities. This is a lot more flattened than that. And the terminology bubble is a bit extreme. I think it's a slight correction. Just noting that Bali
is just after the COVID, yeah.
A bubble's a bit of a strong term.
Yeah,
it's a slight correction, but places like Bali, there's such an influx of tourists, influx of people, that the general trend line is still in that direction. There's not a portion of all development all of a sudden.
It's not mature. It's growing. And as government is, supporting the fact that there need to be more and more tourists, it's growing, of course. So it's not and again, back to the disclaimer before, this is not 100% accurate. What we're trying to show here is not accurate data on 2027, 28, or whatever, or number, or ROI like here, but more trends and patterns. So people understand why what is happening to them is happening to them, and why they are making what they are making money-wise. So the lesson we can take from this is that whatever the moment in time you are purchasing your assets, your property, you should not think of the ROI at one specific time. ROI it's an average. If it's an average, if your developers say, this is an average of a period of 5 years, for instance, or 4 years, which might be, I think it's more or less the cycle, but again, no promises, yeah? If it's an average, they tell you it's an average, then yeah, okay. If they tell you, okay, you're going to make 15% average ROI over the course of the next cycle, for instance, yeah? Then okay, sure, no problem. If they have data to support that thesis, yeah. But if they tell you, look, last year we made 25% ROI because we had 95% occupancy, well, I'm calling BS. because it
was
true, accurate last year.
Very small time frame.
Yeah, it was accurate last year, but not next year.
So what you're saying is zoom out.
Completely zoom out. Being reassuring now. If you've purchased a property in the last 1-2 years and you are disappointed with your agent, you're disappointed with the return on investment that you're getting now, don't worry, it's coming back. It's coming back. It's just that we are in the dip now. We are in the lowest point. It's not going to go lower than that, in my opinion. You never know. You never know. Yeah.
Supply and demand.
Supply and demand. But I think now that everyone is complaining about the returns they are getting from villa rental, there's a correction that's going to be made in the construction. And we have here, so we didn't talk about this, but I put this on the graph, construction phase. Yeah. So as there's a correction in the number of developments, ROI is going to go back to maybe not what it was, but at least a higher position.
So what does that mean exactly? So that just means less developments, or if you're going to build 20 units, you now build 10.
But that's less development.
Yeah, exactly. That's like what it would kind of start looking like. It would just be a little bit of a scaling back. Somebody who might not build a villa or would build a villa might not now. That kind of thing. So the market gets a little bit more competitive and smaller,
Well, what it means, again, is zoom out. Whether you're a developer or whether you're an investor, what's happening right now does not matter. It will happen again in 4 or 5 years, and then again in 4 or 5 years. You got to zoom out and understand how this works, so you don't base your purchase or whatever decision, or your sale, whatever decision you make on what's happening right now. Mm-hmm. You should base a sale or a purchase on a cycle. Okay, and cycles averages. Mm-hmm. Yeah, that's it.
Yeah,
I think it's
covers everything.
Well, I hope so. I mean, there's a lot more to talk about here.
I think just the construction lag, I think that just pushes everything back, so you can't be immediate on your decisions. That's probably something worth touching on, but it's quite self-explanatory otherwise. But yeah, I think we covered everything off.
Yeah, but if you think in long term, I mean, if you rent a villa for 5 years, yeah, you better choose your timing right, yeah, or for 3 years or whatever. If you're doing arbitrage, you really need to check on that where you are in time. So arbitrage, for people who don't know, is like basically renting a villa to one person on a, let's say, yearly basis, and then subletting it to tourists on a nightly basis or monthly basis.
And that's rampant in Bali. Can you imagine? Yeah, I mean, you're sitting with 10 villas, you just signed up, and then doing arbitrage, and then all of a sudden you have to rent it for less than you got it for. That's
exactly.
Big problems.
I mean, you can lose money by
Yeah.
not having your timing correct. Yeah. We put the line with our graphic designer. I say, okay, move a little bit on the left, move a little bit on the right. It's not 100% accurate, again, because we don't have enough data to make it accurate. But the trend is true, and the cycle is true. It's a market cycle. It happens here. It happens in other places in the world.
And you'll make a lot of money if you get it right.
If you get it right, if you understand that correctly, you can.
And if you don't, you won't.
Exactly. Yeah. And also, it will enable you to not make mistakes, whether selling at the wrong time or buying at the wrong time, or or panicking. Yeah, exactly. Yeah. So yeah, I mean, any questions you have, put them in the comments. We try to be faster to answer than the last podcast. I was very, very slow on this one. Sorry, apologies. But yeah, I love the engagement that you guys have. I get a lot of comments. I get a lot of people. Those who have our WhatsApp or email, they write to us a lot, and we get a lot of engagement from everyone. So thank you for that. It's great to see that there's a community of people following us and engaging with us.
Yeah, getting value out of
there's a lot of subscribers. I'm surprised myself, like 3,000 something, 3,500, I think. Yeah. I'm amazed. So thank you for that, guys, and feel free to reach out to us directly. We are always happy to grab a cup of coffee with anyone. We are in Per-Canaan. Gawain and I, our office is here. So yeah, I hoped that that was helpful for you guys. Was certainly helpful for him. He didn't know about it yesterday.
Oh, I'm not so sure about that. I've been in crypto.
I've been
in crypto for 10 years. I know exactly about supply and demand.
That's true.
Liquidity.
True. I'm joking. Don't forget to subscribe, comment, share,
like. And any ideas? Any ideas? Give us some ideas for podcasts.
Yeah.
We have to rack our brains sometimes to come up with things.
Exactly.
But this is a great idea. It was a good one. Omri's idea for this week. So, yeah. Well done. Thank you.
See you soon. Ciao, bye.
Subscribe, yeah?
Bye-bye.